There's a company most people have never heard of, yet it controls the future of every smartphone, computer, and AI system on Earth. ASML Holding, a Dutch firm based in Veldhoven, is the invisible giant powering the 2-nanometer revolution. While tech giants like Apple and Nvidia grab headlines, ASML quietly holds the keys to the entire semiconductor kingdom. Here's what makes ASML extraordinary. They have a complete monopoly on extreme ultraviolet lithography machines, the only tools capable of etching the world's most advanced computer chips. Think of these machines as the most precise printers ever created, using light waves 13 times smaller than what we can see to carve transistors onto silicon wafers. Without ASML's EUV systems, there would be no 3-nanometer chips, no cutting-edge processors, and certainly no AI revolution as we know it today. The financial picture for ASML is absolutely compelling right now. We're entering what analysts call the 2026 DRAM supercycle, where memory manufacturers are expanding capacity by 250,000 wafers per month. This massive expansion is driving unprecedented demand for ASML's lithography equipment. The numbers tell the story clearly. Revenue has surged from $5.7 billion in the first quarter of 2024 to $9.6 billion in the fourth quarter, with gross margins holding steady above 50%. Alethea Capital just made waves by upgrading ASML from sell to buy, doubling their price target to $1,500. That represents 29% upside from current levels and reflects what analysts see as a fundamental shift in the semiconductor landscape. The upgrade comes as ASML reported 39% projected earnings growth, driven by the perfect storm of AI demand and memory expansion. The catalyst everyone's watching is ASML's high-NA EUV machines. These $400 million systems represent the next generation of lithography technology capable of producing chips at the 1.4-nanometer node and beyond. Intel has already taken delivery of the first systems, and customers have processed over 300,000 wafers on these machines. The technology is maturing rapidly, and adoption is accelerating faster than anyone expected. Taiwan Semiconductor Manufacturing Company's capital expenditure plans provide the clearest signal of what's coming. TSMC just announced they'll spend between $52 and $56 billion in 2026, a massive jump from $40 billion in 2025. This isn't just expansion for the sake of growth, it's a strategic response to overwhelming demand for advanced AI chips and next-generation processors. When the world's largest contract chip manufacturer commits $50 billion to new capacity, ASML benefits directly. Through order books. The math is straightforward. TSMC's 3-nanometer technology already accounts for 28% of their wafer revenue, generating a 62.3% gross margin. Moving to even more advanced nodes requires more EUV systems, more complex lithography processes, and more ASML equipment. Every dollar TSMC spends on advanced manufacturing flows through to ASML's order books.
But let's talk about the risks, because they're significant. Geopolitical tensions represent the biggest threat to ASML's growth story. The company faces complex export restrictions when selling to Chinese customers, who represented 42% of net system sales in recent quarters. These restrictions could tighten further, potentially cutting off a major revenue source. The January 2026 strategy update will be crucial for understanding how ASML plans to offset potential Chinese revenue declines. Global tariffs present another challenge. As trade tensions escalate, ASML's international supply chain could face disruptions. The company relies on thousands of precision components from suppliers worldwide, and any trade barriers could impact production timelines and costs. Additionally, rare earth material shortages threaten execution timelines, particularly as demand for advanced lithography systems continues growing. The regulatory environment adds another layer of complexity. Export licenses to China remain subject to political winds, and changes in government policies could dramatically impact ASML's addressable market. The company must navigate these waters carefully while maintaining relationships with customers across different geopolitical spheres. Despite these risks, the long-term outlook remains compelling. ASML enters 2026 with a backlog estimated at over $34 billion, providing revenue visibility well into the future. The company's monopoly position in EUV lithography creates a powerful moat that competitors cannot easily cross. As chip complexity increases and manufacturing nodes shrink, ASML's technology becomes even more indispensable. The AI revolution is just beginning, and every advanced AI chip requires ASML's lithography systems. From data centers to autonomous vehicles to edge computing devices, the demand for cutting-edge semiconductors continues accelerating. ASML sits at the center of this technological transformation, providing the tools that make the digital future possible. Looking ahead, analysts project revenues of $44 to $60 billion by 2030, reflecting the company's central role in semiconductor manufacturing. The stock trades at a premium valuation, but that premium reflects ASML's unique position as the gatekeeper of advanced chip production. To stay ahead of the global markets, please like, share, and subscribe for our deep dive reports. Disclaimer: this content is for informational purposes only and does not constitute financial advice. ASML is subject to complex geopolitical and technological risks. Please read all official investor relations documents and scheme-related papers carefully and perform your own thorough analysis before investing.